With margin debt sitting near all-time highs, the FINRA margin debt to GDP ratio sitting at all-time highs, and the Warren Buffett indicator showing 238%. So what does all this mean? I know it sounds all very complicated, so stay tuned and I'll break it down for you. It's actually really simple, right? Quick disclaimer, none of this is financial advice. This is purely my own opinion. Please do your own research before making any financial decisions and any decisions in general, right? So do your own research and make your own decisions, come to your own conclusions, right? So what is margin debt? Basically, margin debt is amount of money that an investor borrows from a broker via a margin account. So it can be used to purchase or sell short a stock, right? Or buy securities, right? So yeah. So let's look at the margin debt data, right? So basically, if we look at January 31st, 2020, which is last year, January, and then March 31st, 2020, which is the bottom of the COVID crash, the really quick crash. So if we look at 5 years, this is basically the COVID crash. So it's down like what, 31%. And you can see from that moment, the margin debt went down significantly. So the percentage wise is not 31% definitely, but it went down about nearly 20%, right? So we can see that margin debt clearly has like a big indication on stock prices, because if you take on more margin debt, you can buy more stocks, right? So another point to look at would be the June 30th and the July 31st, 2021, right? So you can see that actually the margin debt reduced around 5%, right? So in this case, it's a bit, it's a bit closer. So let's look at 1 year, and though it may seem like a small bump, right? We can look at the July from the all-time highs. It's down about 2.5%. Actually, it's down about 3% from the all-time highs. So that's if you pick like the complete top, right? So we can see that when the market is down about 3%, your margin debt is also down about 5%, right? So we can see that there's a clear correlation, right? So another set of data would be this FINRA investor margin debt relative to GDP percentage. So basically 4% of the entire US GDP is now, there's 4% worth of GDP in margin debt, right? And that's very high, right? Compared to especially historical averages. It's higher than the dot-com bubble, it's higher than the housing crisis. So we know that there's unprecedented leverage being taken on because of extremely easy monetary policy, right? So yeah, that's the margin debt data, right? So another thing to look into would be Tether, right? So this, if you don't know anything about cryptocurrencies, this is like one of the biggest, no, it is the biggest stablecoin. And since last year, you can see that it went from 13.6 billion to about 66 billion right now, right? So basically, what is that? Like almost a 4 to 5x in their market cap. Basically, they went from having 13 billion tethers. So tethers are basically supposedly one-to-one with the US dollars, right? So, but you can see there's a huge fluctuation here. But anyways, the basic gist of it is that while you can even look at Bitcoin's price performance since then, so you can see that, let me just click into Bitcoin. So Bitcoin 1 year performance has been very spectacular. Oh, okay, maybe not. Sorry. So since the 1 year, it's went from 11,000 to like 47,000. So you can see that the increase in Tether supply has also probably helped out Bitcoin to move upwards, right? So I'm not sure. I have no confirmation on whether it's because Bitcoin prices are going up, therefore more people are depositing money and buying Tether from this Tether quote-unquote company. So if you know anything about that, it's really opaque right now, right? The data with it. So yeah, but definitely the increase in Tether has correlated with the increase in Bitcoin prices, or maybe it's the other way around, right? So both are possible. So let's look at the Warren Buffett indicator. And right now it's at 238%. So what does the Warren Buffett indicator say? The Buffett indicator is the ratio of total United States stock market valuation divided by GDP, right? So basically the whole US stock market is now worth 2.38 times more than their GDP, right? So this is how you calculate it. So this is the US stock market value, and this is the GDP right now, right? So you get a 238%. So let's look at historical averages compared to this, right? So in a general rule, when you're below this, because when stocks are trading below GDP, right, you want to buy it. So all along here was like a good time to buy. So this chart goes all the way back to 1970s, right? So not financial advice, but historically it's been good times to buy, right? And when it's up here, historically it's been bad times to buy. Look, here's the dot-com bubble, here's the housing crisis. So maybe during the housing crisis there wasn't a huge overvaluation, just 5% above GDP. Maybe you might say that's a bit overvalued, but may also be due to, like, after the dot-com crash, people have a lot of bad memories with stocks, and then after that it crashed under here. So if you bought stocks here, you would have done really well, right? Because as you can see, it 4x, right? So, but the main point is, compared to historical averages, we are at all-time highs, right? And this is incredibly scary if you're invested in the markets, right? Because we're even higher than the dot-com bubble. Just think about that. So think of all the indicators, and maybe they're starting to flash red, right? Because lots of margin debt, lots of overvaluation and speculation, right? So the question for this video is, why am I looking at all this data? So when is the turning point? Crash starting in a month, what to look out for? So basically, to answer the first question, I don't know when the turning point is. Crash starting in a month, I also don't know. It may continue, right? It may go to 400%, or it may go to 800%, but that's just a possibility, right? So what's the probability of that happening is probably very low, in my opinion. So yeah. So when is the crash going to start? You won't know when the crash is going to start. That's why it's a bubble, right? And the margin debt might just continue to go to 1.6 trillion or something like that. No one can really predict all these things, right? But what are the warning signs to look out for, right? And when it comes to margin debt, you have to look out for when the margin debt starts to go down, right? Because that's when people are covering their positions, they're selling, so they have to sell to cover their positions, right? Let's say if you take out margin or whatever, you have to sell in order to cash out, in order to pay back whatever debt you have, right? So when the prices start, margin maybe starts going down a lot, yeah, that's indicator you might want to look out for, right? So my conclusion is, looking at more data will help us evaluate our investment decisions, right? So why do I waste my time looking at all this data? Personally, I find it incredibly interesting. A lot of people might say, this is boring, I just want to make fast money or something, right? But basically, yeah, looking at more data will help us evaluate our investment decisions. And margin debt is only one part. Margin debt is only one of the many parts of the puzzle, right? So think of the stock market as a whole. It's just a giant puzzle for everyone to solve, right? So yeah, but even if you don't know how to solve the puzzle, historically it's done. US stock market has done really well, right? But basically, yeah, if you look at all the data and you try to solve the puzzle, margin debt is only one piece of the puzzle. So don't use this video as like, the margin debt is really high, or I'm going to sell out of all my stocks. It's only one part of the puzzle. So that's about all I wanted to cover today, right? So thank you very much for watching till the very end of the video. If you did enjoy the video, smash up the thumbs up button, hit subscribe, hit the notification bell and press all, right? Because if you don't press, you won't get notifications. So comment below. Any constructive comment is much appreciated, right? So with that being said, hope you have a fantastic day ahead, and peace out.